In this video, we're going to go through Bitcoin news and Bitcoin levels. And according to filings with the Securities Exchange Commission, Coinbase is about to launch a Bitcoin fund. We can see the filing dates and the accepted and effective dates here for that Coinbase filing. The name of the issuer is the Coinbase Bitcoin Fund, and when we look into the filing, it looks to be a pooled investment fund or a hedge fund. The fund is catering for sophisticated investors, and you can see a minimum investment from outside investors of $100,000. The Bitcoin halving is approximately 30 days away. Kathy Wood is very bullish on Bitcoin. Kathy said that Bitcoin's price could easily rise above 3.5 million. Of course, that's over time. Bitcoin NFT values continue to soar, and just out, will Bitcoin finally outsell Ethereum in terms of NFTs in March? Looking at blockchains by NFT sales volume, we can see Ethereum is still number one. This is over the past 24 hours, but Bitcoin is coming in at number 2, Solana number 3. However, across the past 7 days, look at Bitcoin Go, it's the number 1, followed by Ethereum and Solana. The returns on Bitcoin when compared to the S&P 500 are just literally out of this world. This is why BlackRock is primarily interested in Bitcoin, with a small amount of Ethereum and a very little of everything else. Bitcoin is expected to 3x over the next 24 months. Unfortunately, many people think that trading in crypto is like trading in the stock market. It is not even close. It requires a completely different outlook. Crypto is exponential by nature, and recently we've seen massive open interest. And when I mean massive, I mean absolutely undeniably massive. If we go back to the twin peaks of the last halving's bull run, we didn't even get close to the open interest that we're seeing right now. That means there's a lot of leverage inside the market. Now, what does that mean? As you get more and more leverage, there's more and more capability to get exponentially volatile. A lot of people also misunderstand the halving. The halving is where supply constraints come in and effectively doubles the cost for Bitcoin miners to secure the Bitcoin network. This means that a lot of the weak miners will be forced sellers, and that could drive Bitcoin's price down, so something to be aware of. As well as the fact that the Securities Exchange Commission is going after Ethereum. As a professional investor and trader, a sophisticated one, you want to be aware that when the news headlines, and these are all from the past 24 hours, when you see news headlines talk about raising targets, that should send some alerts to you that negative price momentum is on the way. Right now, the likelihood is that people are preparing for an SEC showdown with Ethereum Foundation. Bitcoin is the world's largest cryptocurrency. Ethereum is number 2, coming in at $395 billion. This is the one that the Securities Exchange Commission is going after. We've been talking about this for a few days now. It's important to see yourself as a professional trader and investor, and when you read the headlines, don't be too swayed by it. And especially know the source. JP Morgan has always been highly negative on Bitcoin and crypto. And when I see a headline like this, Bitcoin trouble's far from over as more carnage looms. Oh, that's just JP Morgan. I would expect JP Morgan to say something like that. It doesn't mean that they're wrong. It just means that if you only get one tune out of an instrument, you know when you pick up that instrument what tune is going to come out of it. As a professional, you must prepare yourself simultaneously for an up case, a neutral case, and a down case, and just watch CTKS structure to determine where the price is actually going. It's important to maintain a neutral news stance at all times, because you can see that the news will absolutely drive you insane. You will find that even as prices go down, there are a lot of people spouting good news. Bitcoin eyes 7-month win streak for the first time. Good on you, Bitcoin. You need to become independent of the market. of market news and market sentiment. Just looking into the structure that you find on the Tier 1, Tier 2 and Tier 3 charts, the charts will tell you exactly what is going on inside the market. Let's look at the structural levels on Bitcoin. Crypto is exponential by nature. You can see after the FOMC meeting, what happened? The markets absolutely went bananas and now they're coming down. Why is this occurring? There are absolute reasons for it. The first one is structure. We mark up with CTKS structure all of the price levels inside price history. Now let's pop on the indicator. The reason that we put on the structural indicator, we must know where structure is being hit. Crypto is unlike any market on the planet. You will see that we came up through so much structural overhead resistance, and when we got to the $67,000 mark, we just couldn't maintain positive momentum. You can see we're making a series of lower highs, and it's continued, especially because the SEC wants to have a go at Ethereum. The way to interpret structure is really quite straightforward. If the price manages to get above a structural level and it can't get up to the one above it, it's coming back to the one below it. If it can't hold it, it's coming back. Also notice that these are very strong and these are quite weak. What it basically means is the crypto requires many safety nets to capture price decreases. You must know where your strong structure is inside the market during the red times. The CTKS Masterclass teaches you how to look at the crypto market, and you must be very advanced to trade and invest in crypto. The Masterclass is unlike anything you'll ever experience. It's not like any Udemy course or anything like that. It is literally like a university degree, but it's practical and you can make money from it by applying it. When we look at Bitcoin, we know that it's been trading since 2009, which is in excess of 5,200 days. We can see a large amount of structure at that 62,220 mark. That's the level that we're going to be paying a lot of attention to right now. If it falls below that, we'll need to look at the lower structural levels. And you can get these structural levels just going to ctksmethod.org. For example, if you understand how the different markets work together, you are not surprised at all that gold made its ascent up with Bitcoin and is now moving in the same direction. Please let me know in the comments, what do you think this is because of? And it's very clear cut what it's because of. Also, you can see that Ethereum is moving in directional alignment or directional correlation with Bitcoin. This is to be anticipated. Solana is also. If we see a sell-off or an increase in Bitcoin's price, we would expect the same to be reflected on the alts, because no alt can escape Bitcoin's gravity. And that's what we're seeing across all the top cryptos right now. Being a professional trader or investor inside the markets is a requirement to look at just more charts than the ones that you put money into. For example, you need to understand how the Forex pairs impact not only the stock market and bonds and yields and commodities, but also the crypto market. After all, you're putting your hard-earned money on the line. You can at least understand what is going on underneath the hood. Therefore, you will be able to look at a price chart and explain exactly without looking at another chart what chart is causing your chart to either move up or down. I posted something on X yesterday, and I'd just like you to be aware of it. Life-changing wealth is coming up, but we must take a neutral stance to separate signal from noise. The SEC, the Securities Exchange Commission, is attacking ETH and the Ethereum Foundation. CZ from Binance is getting sentenced very shortly. The SEC Binance lawsuit is still open, as is the SEC Coinbase lawsuit. And inside those two lawsuits were a lot of alleged securities amongst the top cryptos. If you don't know your CTKS structure, you will likely to sell at support and buy at resistance. You don't want to do these two things. And a lot of people, when they see red, they just run, and they run like hell. We call those people retail. If you feel that you fit into that group, it's not a problem. Everybody does at the start. But you have to resist the urge to run away when the prices go red. What will the institutions do as the prices go red? They'll do the exact opposite of what retail does. They'll buy. The key is, and this is only a question that you can answer for yourself, what will you do? If you're ready for the volatility and you can take profit by investing and trading in it, you'll do incredibly well. So many people wanted to buy Bitcoin when it came down and down and down to 16,000. But very few people were hanging around when Bitcoin was down there. But some people did, and they rode it all the way up to what its current price is now. So they did incredibly well. But just please bear in mind that you always seek to buy the bottom. And if you're not in the market when the bottom is occurring, how could you ever buy the market? These are questions that nobody asks of themselves. There are always problems inside financial markets. We could include the commercial real estate issues and regional bank stability, but we must be prepared and not scared. I'll give you a very, very easy illustration how to be prepared. Say that something is trading at $10 and it just goes down to $5. That's a 50% retracement. 10 and the 5. Now if it goes from 5 just back up to the 10, that's not a 50% increase in price. That's a 100% increase in price. That's exactly why institutions buy on the red, because they know the mathematics of percentages. You must think inside this kind of construct when price waves are going down. And where does price go to? It goes to CTKS structure. You'll see it all the time. We prove it out time and time again across stocks, forex, commodities, crypto, everything. CTKS structure is the world's most powerful structural analysis, resistance, and support tool. Because when you learn it, you can't unlearn it. You see everything through that perspective. And boy, oh boy, is it powerful. You can, of course, learn level 1 and level 2 standard certification and draw up your own CTKS structure. And I recommend that you do that, because you'll get used to the personality of the charts. Some charts are very slow moving, like gold, and other charts are very, very choppy. And when you see the personality of a specific chart, that's exactly what you want to know and to understand. The one thing that you do, never ever run from the red, and always be prepared and not scared. Incredible investing and trading opportunities are coming up. For example, remember, drops 50%, comes back 100%. That's how percentages work. You'll find that the most powerful tool at your disposal is CTKS structure. You've just seen the structural levels on Bitcoin, and you can pick up that indicator from CTKSMethod.org. Bitcoin is a Tier 1 chart. Tier 1 charts are the engine of financial markets globally. When you compare Bitcoin to things like gold and silver, commodities, or the stock market such as the S&P 500, you can see that Bitcoin and the traditional asset ROI, it doesn't even compare. Bitcoin is an apex predator when it comes to returns. Even though Bitcoin is up substantially this year, just remember that there's always inherent volatility inside the market. We can see 30, 40, 50% retracements and drawdowns across crypto, so please be aware of this. It can even get greater than that if you're on meme coins or other low-hanging cryptos. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.